Okay.
Starting.
Welcome everyone back on the Financial Fox with Clem Chambers, talking about smart investing and the kind of gloomy situation that we are in. I mean, I'm not just talking about crypto, obviously.
What about crypto?
It's also about the Nasdaq, the London market. I mean, can we see a green light on the screen, or is just or a blue light? I don't know.
A white light. It's a train coming.
Oh gosh, Clem, what's happening? Is the big crash coming or come already?
It's here. It's here. I mean, I don't know how to share my screen with you, but how do I share? Let's see if I can find that button. Yeah, let's do this. Let's do this. Let's see if I can. Yeah, okay. I don't like sharing screens, but why not, folks? Here you go. Have a look at this. Oh, yeah, that'll do. I think that's that one. Yeah, that'll do. Okay, share that screen.
Okay, seems it's working.
You see that chart?
Yeah.
Well, you know, there's your Nasdaq. And if there's 1 ounce of Chartist in your bones, you'll see that that's mid-crash. Now, if you look back, you'll see the dot-com crash. That's the little lump back down on the left. You see, this is a chart that goes back to the late 80s. And this is a yearly chart. Every bar's a year. So, you know, up every year, pretty much, you know, a little dip, couple of dips in the last 13 years, and boom, down we go. The question is, how far do we go down? And I think at least to 10,000, maybe 8. And, you know, if you're going to be very negative, if you're going to be, you know, sort of third person, you'd see maybe even 5. But yeah. I actually think that the story is, now, how do I stop sharing the so you don't see that anymore? My view is that the Fed is going to control inflation by giving everybody a haircut. And they're going to give people a haircut by cutting the top off the market. They've already cut $9 trillion off American wealth, which is roughly speaking what they pumped in as money supply. So they've actually already taken out from the economy or let the market take from the economy how much money they have to put in. But the problem with inflation that we've got now, it's wanted by governments because it sorts out their deficit problems and their mounting debt. It always has and it always will be the device for doing that for governments. But at the point when they get it rebalanced, which should be 2 or 3 years' time, they will just shut it down, and they can. It's very simple to shut it down. Very painful. A lot of politicians will go, no, we'd like, oh no, don't do that. And stop it. But of course, you know, and that's why places like Turkey have it permanently, and that's why places in South America have it permanently, and that's why they have it permanently in Africa and parts of Asia. Because politically, it's very difficult to stop printing free money and giving it to your pals, and that's what inflation's often about. Because rather than taxing people, I mean, you know, look at Zak, he hates to be taxed. So you don't tax him by taxing him, you just create inflation, and he's taxed just the same.
I'd rather not work. I mean, it's 40% tax. I'd rather not work. So what's the point? And they want you to, you're supposed to be not working from home, actually going out to the office, you know, because obviously everybody listens to Boris Johnson whenever he says something. So you're supposed to go out there, spend 10 or 15 pounds getting there, another 10 or 15 pounds on the sandwiches every day, etc., etc. And you're looking at 50% down on your PAYE. It doesn't make any sense.
Well, I don't disagree. I live in Monaco, so you know that's not something that
directly. That doesn't make anybody feel any better.
I'm not here to make people feel better.
Yeah,
but
well,
you know,
come on.
I mean, what they do here, what they do in Europe, and the French are brilliant at it, is that they stick a tax on your employment that you don't know you've even got. So they charge your employer 50% on top of what you're paid. So you go, well, I'm earning 20 grand a year, but they actually charge the company another 10 grand on top. So actually you're earning 30 grand, but most people can't work it out that they're actually earning 30 grand because the government, you know, does it in such a way that you don't actually see that as your salary. Of course it is, because it costs the company 30 grand to employ you. But the company says to you, you're earning 20 grand. Well, you're not, you're earning 30 grand, but the government is charging the company directly. So there's all, you know,
no. The other thing is, it's also use of proceeds. You know, like you have with public companies, use of proceeds when you have a placing or something like that. I'd still like to know what, for every pound you pay in tax, how much of it actually gets to where it's supposed to go, or, in the NHS, for every pound that goes towards it, what kind of value do you get? 20p?
Asking the wrong question. You're asking the wrong question. It goes exactly where it's supposed to go, but it doesn't necessarily mean it's going for your benefit.
Yes, but every pound that goes into, what's the efficiency of the health service? For every pound that goes into it, how much medical or medical care is provided? What's the cost of admin? What's the cost of admin? So let's say it costs us £100 billion a year to have the NHS running. How much of that goes in admin and various wastage and killing 150 people?
None of it's wastage. It's going where it's meant to go. I'm Panglossian about it. It goes where they want it to go.
What, the 150 grand a year for the trust managers?
Exactly. It goes where they want it to go.
Okay, well, that's all right. No, that's fine. That's fine.
You have to turn it around, right?
If it goes there, that's fine. If it goes to nurses, who wants that? That's
it goes exactly where they want it to go. That's what you have to understand. It's not a mistake. It's not incompetence. It's the opposite. Yeah.
No, that's a good point. That is actually, you're right. It's a perfect machine.
Yeah, of course it is.
Money wasting machine.
There's one. No, it's not money wasted for them. It's money wasted for you. It's not the same thing at all. Look, the question that I'm going to give you this because you'll have fun with it, and all the viewers will have fun with it. If you ever meet a politician, ask him this: what's the purpose of government? And they will swallow their tongue. Yeah, they go. They should
raise money. It's to tax people.
As it's their business, they should have an answer like that, but they don't. They all choke on their tongue. And when they come up with an answer, it won't be the correct one. But the correct textbook and political theory answer is the purpose of government is security for the population. Yeah, that is it. That's why you have, if you look back, national insurance and health insurance, and insurance is all government things. It's all about insurance, right? Because insurance is security. So the purpose of government is security. That's the textbook old-fashioned answer. Well, of course, before there was democracy and enlightenment, the purpose of government was for the royal family to get all the stuff. Yeah, and the purpose of government for Genghis Khan was to kill everybody, right? And the modern purpose of government, well, the politicians don't seem to know what it is. So funny enough, actually, the purpose of government is to look after the people in government.
Yeah, exactly. I just have an headline just so, and it just made me sick. Children suffer food poisoning as parents switch off fridges overnight to save on energy bills. Seriously? This is like, I don't know.
Well, you've got to see that government is a dialogue between the ruled and the rulers. And then a lot of things actually make sense. And once they make sense, you can actually, if you want to be bothered, try to change it. But, ultimately, that's what democracy is for. But don't think these people are stupid. Don't think these people are incompetent. A lot of this stuff goes exactly where they want it to go, but that direction is not you. Yeah. All around the world, and it's just a matter of degrees.
Okay.
But anyway, this is not a political show. This is a money show.
Exactly.
It's a very good political show, though.
And everybody here is looking to kind of, we need to give some kind of positive, approach or vibes about.
Bargains are coming. Bargains are coming.
Yeah, that's good.
Bargains are on the way. Buy cheap, sell high, buy low, sell high. Well, maybe you didn't sell high. Well, I did on crypto, but everyone said I was a fool. And I will buy low with a bit of luck if I'm right. And then I'll sell high again. When it gets to $90,000 on Bitcoin, I'll go, oh, I'm selling now. And they'll say, you're mad, you're a fool. What? Ethereum's only $12,000. It's going to 50. What are you doing? And maybe it will. But, buy low, sell high.
Okay.
And low is coming.
Low, when you say low is coming, how much we should expect the stock market to go down? And then obviously then we can talk about crypto too.
Well, I'll tell you what I'm doing. I'm looking at my portfolio. And when the market drops 2%, I want my portfolio to drop 1%. And when it goes up 1%, I want it to go up 1% or 1.5%. If I'm going to be in at all. And I maybe shouldn't even be in, but I'm very in because I've bought lots and lots of very, very cheap stocks. And I've bought lots and lots of defensive commodity and precious metal and energy stocks. all pretty much the same thing, inflation hedge stocks. So I'm kind of expecting it not to do as badly, and maybe, just maybe, if the wheels come off, they'll all go berserk up. I probably should just keep it simple and get out. But I've taken this diversified portfolio of very cheap value dividend paying stocks plus defensive commodity inflation and protecting stocks, and they work together, because sometimes, you know, the gold stuff and all that stuff will go up, and sometimes it'll be the cheap stuff will go up, and when they go down, they don't seem to go down. They're going down half. So it's what, down 2% today, or is it 1%? I can't remember. I haven't looked for half an hour. But my portfolio is down half that amount, and it should have a bit of spring on the way up. Maybe it won't, maybe it will. So, but you know, if I thought the wheels were going to come off, I'd be out. But what I think is happening is the Fed have decided to give everyone a haircut to suppress inflation by letting the market fall, and it's fallen $8 trillion, which is how much the Fed put in cash. Unfortunately, it'll probably have to fall maybe 20 trillion for it to have the right effect. And then, so there's a Fed put in at about 10,000 on the complex, 3,500 on the S&P 500, if I get the right number right, somewhere around there. So we're at least halfway there, I think, maybe a bit more than halfway there. And then the Fed will come in and pull the lever, and the market won't go down anymore.
Zak, what are you doing?
No, I think it's a bit, we're in a bit of, you know, you're in the brace position instead of closing your eyes and wondering when this is going to stop. Obviously, it's a bad time of year anyway for the stock market. You know, the sell in May is working very well, and I think it's one of those things that, you know, Clem's right that previously the Fed would come in, maybe even, you know, earlier when the market started falling, they'd do something almost immediately. Now it looks like they're going to, you know, give people a bit of a bruising, and I think you can't say that there's not a lot of money still swilling around, and we are a little bit in the a lot of people have still got a lot of money, and
huge savings out there.
Sorry,
huge savings out there. Some people saved huge amounts of money during COVID.
Yeah, so if you just look at the situation in London, everybody's whining and dining like there's no tomorrow. So I think there is an element of that, but there's also an element, I suppose, of just we're likely to see a big division between those who've saved and have been, you know, lucky, and those who are, you know, literally, you know, putting the fridge on, turning the fridge off overnight. I'm not sure whether people turn off their fridge and then still go on holiday, or whether they're just trying to sort of spread things out a bit. But it's a great headline.
Yeah, it's a great headline. I think the amount of people turning their fridge off is very, very small. But you never know.
Exactly, because you never know when you switch it on if it works properly, and then you have to call out an engineer, and you spend more than switching off the fridge.
Well, you certainly know that when the media prints it's probably a lie.
Yeah, exactly.
That's almost a given, isn't it, these days? I mean, when do they ever tell the truth? I mean, it's like the old Nixon joke about, you know, they can lie out of both sides of their mouths at the same time, and if they catch themselves telling the truth, they lie just to keep their hand in.
And also they keep bringing in children, and you know, more like
children and old people. Yeah, yes, the emotive people.
Yeah, now they can't bring in women anymore because, you know, that story doesn't work. But yeah, it's a bit sad to see that. And what about bonds, Clem? Do you have any bonds in your portfolio?
I at the moment it's Bondageddon, okay? Bonds are absolutely getting their heads ripped off, and I wouldn't touch bonds with a 10-foot barge pole right now. But I don't touch bonds with a 10-foot barge pole anyway, because, you know, if you read the history of finance back the last 500 or 600 years, bondholders always get killed and gained by governments. You know, and Samuel Pepys lent his money to the king, never got it back. I mean, that's the history of lending money to the state, is you lend it to the state, you don't get it back. I mean, when did you ever get it back? It's only the last few years that bonds have been such a great trade. And you know, why would you, no, 4 or 5%? No, I don't want that. I would cry. I wouldn't even bother with the markets if I thought I was only going to get 4, 5, 6%. And, you know, equities, if you know what you're doing, you can get 7. And if you're good at it, you can get 15. And if you're damn good at it, you can get 25. So why would you go near bonds? I mean, I know, but I'm allergic to bonds. I know lots of people love it and it's a huge industry and all that. But no, don't like bonds. Okay. I certainly would never lend my money to the government. or any government. I mean, you know, tell me, apart from the modern era when bonds were good, tell me any other period where it's not just handing your money over to the government for them to steal it. War bonds? Oh yeah, that was great, wasn't it? All the bonds back before the First World War, that was great, wasn't it? It's just no. Well.
What about okay, so no bonds, just be more defensive with stock and buy cheap.
Well, cash is good. Okay, one thing about cash, if you're going to hold cash for 3 years, you've got a problem. If you're going to say, oh my God, we're in a crash, I'm going to get out and I'm going to pile my cash up and I'm going to wait for the dust to settle, then I'm going to get back in. Not so much of a problem because, you know, a quarter of a year is 2.5% loss in inflationary terms, right? And so if you're dodging a 10% drop for 2.5%, not so bad. But, you know, you've got to be sure. And I think what I'm doing is just be defensive and just buy cheap stocks and buy stuff that's in the commodity sector and chin it out, because it's very difficult to get out at the top, although I've done it a few times, and very difficult to get back in the bottom, although I've done it a few times. But I can tell you it's very, very difficult. And, you know, for every time you get it right, you might get it wrong twice and just not be better or worse off than you were before. And I think there's this copper bottom out there. You see, the UK market is so damn terrible that it probably won't do what the American market does if the American market goes off the rails, because it's already pre-crashed, hasn't gone anywhere in 22 years. I mean, Zak had all his hair when the last time we were at these sort of levels, the first time. And, you know, didn't you?
It's always been pretty poor, actually.
Okay.
No,
well,
no, Zak, you can't say that, because, you know, you are running the London listed company. You need to be upbeat, right?
I am upbeat. I can't be upbeat about my hair, though.
But back in 2000,
even if I was head of, you know, CEO of General Electric, I'd have difficulty doing that. But no, the hair's been falling out since 1981. So I've got nothing to say on that front, you know.
Okay, well, 2000, I had more hair for sure, and you know, it's gone nowhere. So I think the UK market is sufficiently suppressed that it could ride out what's going to happen in America, and you're seeing that it is actually doing that. It's the American S&P 500 is going off a cliff, and the UK market is kind of hovering where it's always been hovering. So I'm wishful thinking, maybe. Wishful thinking.
Okay, talking about crypto.
Trying to find something positive about that, right? Oh.
Yeah, I don't want you to be positive.
It's all the same. It's all the same. The bargains are coming.
Yeah.
The bargains are coming, and you know, there's two ways of looking at it. If you got positions, you love them, just leave them, right? If you got positions, you go, oh, why did I buy that? Oh, I'm so sure. Get rid of them. Turn it into cash. Take your lumps and start again. And then if when it does, which I think will be, you know, right soon, it's all going to be bargain basement. I mean, really bargain basement.
When you're talking about
it'll be like mind-blowingly bargain basement.
Clem, when you're talking about bargain, let's maybe go a little bit more specific. Is NFT project, is DeFi project,
NFTs are going to be free. No one's going to want them. They're all going to be rubbish. I mean, all right, maybe your mutant CryptoPunk 8 tennis club is going to be, you know, still a couple of grand. But, you know, the other stuff, it's just going to be, nobody going to be buying it. And is it going to be worth anything? Oh, who knows? I mean, who got a letter on the first day of stamps in 1840 thought they were going to be worth £25,000 an envelope?
No, but they didn't, exactly.
They all threw them in the bin. There's only 79 left. And I had one, and I had to sell it because I realized that all the stamp collectors were dying of old age, and that they were never going to go up any higher because the whole market for stamps was going to vanish.
Yeah. So
but nonetheless, you see what I'm saying? So maybe there will be some, you know, long-term benefit to those early NFTs, but most of them, you know, would just go to zero. Maybe they'll recover. Maybe they'll go up 1,000% because they go from nothing to something. But, you know, and there'll be the same with lots of tokens. I mean, Dogecoin will be nothings again. And then everyone will laugh. Oh, look at that. Oh, nothing. And then 5 years later, there'll be a lot again. Yeah. I mean, let me show you another chart. You're going to like this. I mean, I've just written this thing for Forbes, so I've been knocking out a few charts. Because a friend of mine was laughing at all the crypto people, and I thought, that's not right. That's not right. You got that one wrong, I thought. And let me just share my screen with you again. make sure I'm on the right page. I don't want to show you my secret stuff. Oh no, wait, I'll find it in a minute. It's here somewhere. Okay, well, I'm going to have to do some clever stuff. Just bear with me 2 seconds, boys and girls. I'll tell you a joke. No, I won't. I'll just do a little bit of cut and pasting. Right, so I'm now ready to share screens with you, and I will share screens. And it's, which one am I sharing with you? This one, I think. Yes, that one. Okay, share. Okay, can you see that? So that chart is the NASDAQ in 1978 and 1980. And you would have lost your shirt in every one of those dips.
That's before I lost my hair.
Before you were born, surely.
No, 66.
So there you go. And that was when the NASDAQ was 130 points, not 16,000 like it was just recently.
Yeah. And
look at those drops. Bang. 140 points down to 110. So that's 30 points out of 140. Later on, you've got 165 to 125. So that's again, that's a 25% drop. Bang, just right there. There's another one, a little one in the middle. Yeah. And, you know, you could easily laugh at the people that were buying tech stocks in 1978. You know, 25 years later, 45 years later, 40 years later, the whole world is upside down because of that lot, the Microsofts, the Apples, the Intels, and all those guys, Hewlett Packards. Yeah. So, you know, that is the real lesson. And even if you never got out and you just went, oh, it's gone down a lot. Oh, great, I'll buy lots. You know, as a young person just starting out, I would have been, well, let's say 1980. I was actually just about to run a business. So if I put my pocket money into whatever I had then, I actually had shares back then. I just bought, you know, a few things and just forgot I got them. Like the person that wakes up with Doggy and with Dogecoin in the wallet. You know, so it's 100 times my money. 100 times. So that is the real takeaway of the situation. Yeah, very, very sad and all that. But when it does hit the bottom, count to 10 and then buy. I mean, wait 5 days after you see it on the 9 o'clock news.
But the question is always, Clem, when you know it's the bottom, when you know that?
When it's on the 9 o'clock news.
Well,
when it's on mainstream terrestrial news.
It's already on the news that everybody. I don't know. Was it? I mean.
No, I'm just saying. I'm not saying it might. I'm saying
no,
when
you know the head. You know the headline. The headline is the one where, you know, there's somebody goes, a company goes, but JP Morgan goes bust, or, you know, one of those things. You need a big,
right, okay, like a big no, isn't the children with the fridge is not enough.
Yeah, no, that's not bad.
Maybe for chicken anyway.
That's not bad, because that means that we're probably near to the end of the, you know, this sort of this particular crisis. But yeah, you need a big name. It's normally a name that, you know, the Bear Stearns or the other stuff like that. Okay. You know, Bitcoin gets suspended, or Binance, right. You know, one of those. Coinbase goes bust. I mean, that's probably the one that, you know.
Okay. So let's.
I would say it differently. It's when they say crypto is finished.
Yeah. Okay.
It's all over for crypto. It's
the death of crypto.
Today the stock market fell 12%. And here's a talking head. The talking head says, "Oh, it's the end of capitalism as we know it."
Okay,
that's the bottom. Yeah, when it's terrestrial news, where it's clueless news, and it's at the front, not at the back, and they say it's the end of the stock market, it's the end of the NASDAQ, it's the end of the tech boom, whatever it is, it's the end of the tech boom as we know it. And these levels will never be seen again by my generation.
Okay, gotcha. Yeah, that was a good point.
Yeah. So it doesn't have to be JP Morgan, but although it helps. But that's normally because it's a fixed crisis. Yeah, something breaks in the system, and therefore whatever breaks. But sometimes there's no break at all.
Like when like a big
market makers pulled the plugs today. The hedge funds didn't come.
The London Stock Exchange stopped for a day.
It was halted 3 times. Yeah, and you know, I blah 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 jumped out the window, and it's the end of the world as we know it. That's the bottom. But then just don't buy. Just count to 10. Leave it a couple of weeks, or even a month. right? Because it unless the Fed steps in and pulls the lever to print, and it won't this time, it takes a fair, it takes weeks and months to recover. So you've got plenty of time. Just go bargain hunting. And when that comes, there's a lot of money to be made there. Lots and lots of money.
Okay.
Because underneath it all, you see, underneath it, there's this drumbeat of ever and ever magical technology, ever and ever better automation, more and more machines. I mean, actually, Karl Marx had it nailed. He said, oh, machines will come along and everyone will have everything, and then money will become worthless. Well, it was nearly right, wasn't he? Money almost became worthless because everybody had piles of it if they knew what they were doing. Obviously, one's poor proletariat didn't know what they were doing and they don't get it. But anybody else who knows, oh, yes, just buy and hold and buy the dip and, oh, yes, and buy houses, and houses become worth millions and billions and the market can only ever go up, and, oh, yes, I'm a young person in Silicon Valley, I'm a billionaire now. Yeah, money almost became valueless in the sense that everybody had more than they needed. Oh, in fact, they're all giving it away, weren't they? So, but, that is the trajectory of our society, is for people to have more and more and more and more stuff because the machines are doing it. And that's not going to go away. It's going to carry on and carry on. It's not going to stop.
Okay. Yeah. Zaki, do you want to add anything before you have to shoot off?
I think that I think my normal thing is with these crises that 7,000 on the FTSE is the floor. So we're still a bit above that, and I think probably that if you're trying to find an indication of when the worst is over, then the FTSE below 7,000 is probably going to be the bottom. I think that that's where it was 22 years ago, and I don't know why the hell it's still in the same place, but that is I think that is for me still a source of value. That represents value of some kind, and it's a good benchmark anyway, even if it's not the same FTSE.
I've got a study. I did a study on why it is down where it is, and it's mainly to do with stamp duty, because it bleeds out 0.5% every time when anyone goes round and round and round. So if you go round 6 times a year, there's all your alpha gone, isn't it?
Why isn't there somebody doing anything about that?
Well, it's taxation, right? But the mistake that's being made is that they're taxing the root, not the fruit. But that's because politicians in general don't understand money.
All right. On that note, thank you.
Zak, all the best for next week.
See you next time.
Bye-bye.
Okay.
It's interesting that transaction tax that we have in Britain called stamp duty. They've actually had that in France for a time. And as soon as they got it in France, it synced up with the English market as being dead as a dodo. And then they cancelled it again and it's taken off again. So, but anyway, no one's going to listen.
Yeah, well, I think it's interesting. It just get a little bit more complicated, and most people, they just want to look for opportunities rather than kind of understanding the fundamentals.
There's a big one coming.
Okay.
There's a big one coming. And, if you think you should sell, you shouldn't. And if you know you should sell, you might as well. Yeah. And I'm sort of like, I think I should sell, so I'm not going to do that. You can see the market's falling and you go, oh, I should sell. So you sell. It goes down. You go, I'm really, really smart. Oh, when am I going to get back in again? Oh, I should get back in. I'm back where I started from. So I haven't actually made or lost, apart from giving my broker a whole lot of cash and paid a whole lot of stamp duty if you're in the UK. So you've really got to know. There's an old gold mining saying that says, if you think it's gold, it isn't. Yeah. If you know it's gold, it is. And that's always use that in all investment. If you think about it, no. If you know,
I remember when COVID kicked off, and before the stock market crash, I remember that you were doing exactly that, but you knew that you had to do that.
Well, the moment you called me and said your mum had been locked down in Italy, I thought I knew I had to sell a quarter of my portfolio. And when I started to sell it, the market wasn't actually wasn't functioning correctly. It was too much going on, and it was creaking at the seams. And when I see that, I'll always sell everything, because when the market malfunctions, you've got to get out. So it's like I've got to really lighten up here because this COVID thing. And when I started to sell, and I realized the market was malfunctioning because everybody was calling up to, actually it was the funds. People who were in funds were calling up their brokers for their funds to liquidate their funds.
Yeah.
Which of course is the top of the waterfall. So the people that were, the people that buy funds and not single stocks were queuing up to get out. And I thought, well, boy, you know, this is, if I can't sell what I need to sell like that, I've got to go. And so I literally went fill and kill for my whole portfolio, spent most of the day unloading the whole damn lot. And yeah, missed 90% of the fall. So, you know, it was fortunate. But, you know, 2007 was the same. You've got to look for a trigger, a catalyst, as they say. And in 2007, it was a broker friend of mine who said, oh, the bond market's frozen. And of course, that's the senior market. And I went, oh, holy cow, if that's the senior market, what's going to happen in the junior market? And nobody put the two together. And so I was out the next day entirely, and then down it went.
Yeah. Okay. Well, keep us updated if you feel any kind of.
Well, you see, if I was in anything spicy, if I was in the spicy stock, and you know, the I don't know what is. I don't really follow the spicy ones, but you all know what they are, boys and girls. I'll be gone. I haven't got any of those. But you know, when I look at people like ASOS in the UK, I get itchy because I mean that's come down so far already. But of course, if it's trending, you don't buy the trend. Well, you do, but not that one. You buy the trend. You go bang, it hits the floor. Boom, it goes sideways. So, for example, I can't stop buying Imperial Brands, which is a tobacco company, because it fell for years and years, and they hit the bottom. They changed management, which didn't impress me. Their previous management. They got a new chap in, and it's went like that, and now it's going like that. And in fact, now it's going like that. And if you look at their stock, they are half-time sales. And if you look at Philip Morris, which funnily enough does cigarettes, they're 5-time sales. And they've got their own, you know, it's like the value of selling one cigarette, if you're Imperial Brands, is only 10% of what the value to Philip Morrison of selling one cigarette. I mean, and they pay a nearly 8% dividend. Now, I don't really care whether the market's crashed with that sort of stock, because it's already crashed. It's paying an 8% dividend. And Philip Morris in the US is valued 1,000% higher in terms of selling cigarettes. And someone's going to come along and snap them up. I mean, I could afford to. I mean, if I could borrow the money to take them over at, say, 40% premium, I could fund all that debt and repay it all from the profits they're making. And you can guarantee they're not going to stop smoking anytime soon. Yeah. And with every country in the West who don't like cigarettes absolutely hanging by a thread when it comes to taxation revenue, they're not going to be too beastly on tobacco now, are they?
Yeah.
So
exactly.
you know, so even in bad times, there are opportunities. But any fool can make money in a bull market, and you have to be very careful and very smart and a little bit lucky to make money in a bear.
Yeah. Okay.
And we're in a bear
for
some time to come, but it's all going to be over. And when it's all over, boy, it will be hallelujah, time to buy.
Okay, well, let's just leave our viewers with some hope for this opportunity. No, actually, opportunity is here, is coming soon, and yeah.
If you don't know why you're buying stocks, only that they're going up, you've got a problem.
Yeah.
And if you have to go around asking what you should buy, you've really got a problem. Yeah, and you need to read lots and lots of books until you know what you should be buying. But you can know for sure that after the market has crashed and you counted to 10, you're safe to buy because it's only going to go up.
Okay. Yeah. Clem, thank you so much for your insight today. And